An effort to turn Nebraska's tax system on its head now underway. State Senator Steve Erdman is one of the people trying to get the EPIC tax implemented, and he joins us now. Senator, thanks so much for joining us. Describe what the EPIC tax is.
The EPIC tax is an opportunity for us in Nebraska to eliminate property tax, both real and personal. It'll also eliminate inheritance tax, sales tax, and state income tax, corporate and individual. And so it's an opportunity for us to put the taxpayer in first place, because what happens now is the government goes shopping and then they send you the bill. Under the consumption tax, the taxpayer becomes the one that decides how much taxes they pay and when they can pay them.
I think a lot of people unhappy with the current system, but property and income taxes do bring in a lot of revenue. So how will this work?
How it'll work is currently we have a tax base that we collect sales tax on of about $49 billion. And our study shows that in 26, that number will be about 60 billion. And because we're going to remove the exemptions and everyone will pay a consumption tax, including nonprofits and the government, that base will then expand to $162 billion. And when you multiply that increased base by the percentage of 7.5, we will collect every dollar that we currently collect from all the taxes we're going to eliminate from the consumption tax. So it's a revenue neutral proposal. It's going to collect every dollar we currently collect, and it'll be such a fair tax that people will be willing to pay it, and they will have the opportunity to know how much tax they pay when they get their receipt from those things that they purchase for their own personal consumption or a service they hire for their own use.
I want to give you a chance to respond to some of the critics. For instance, an OpenSky analysis of the Beacon Hill Institute study that you've been using says it doesn't include some exemptions that are being proposed, like groceries, that it's accounting for growth that's not guaranteed, and that a tax rate of more than 22% would be needed to make this work. What's your response to that?
My response to that is they did their study on the back of an envelope. They will not share with us the economists they use. They do not have a dynamic study. And if you take the current tax base of 60 billion and you divide that into the number of dollars that we're going to need in 26, you get the 22%. So they're disregarding the removal of all the exemptions, and they're also not taking into account all the consumption tax is going to be paid by those groups and individuals who don't pay any tax now. And so consequently, their study is flawed, and it is an opportunity that I've presented to the chamber and anyone else that I would debate them anytime, any place, if they bring me a copy of their study and the economists that they use to prove it's going to be 22%. And it is absolutely false what they're saying.
And we have reached out to the chamber and haven't got a response back either about your call for a debate. You'd mentioned people not paying taxes. How do you see this impacting, or do you see it impacting low-income Nebraskans who may not pay income or property taxes right now?
It's a tremendous opportunity for low-income people. And the reason that is because the difference between a consumption tax and a sales tax is a sales tax is collected every time something sells. And so if you're in the low-income category and you buy something used, you pay sales tax. Under the consumption tax, there will be no consumption tax on used items. And so in the governor's new proposal that he wants to raise sales tax by 1%, it's going to be very regressive for low-income people. Under the consumption tax, they will be to the advantage. It will be to the advantage of those people who buy used items, because there'll be no consumption tax on their used items. So when they say it's going to be regressive for low-income people, they're actually saying the same false statements that they're making about the rate being 22%.
Well, and I am talking to you ahead of an initiative being launched called No New Taxes Nebraska. It's opposing the EPIC tax ballot initiative and includes the State Chamber of Commerce, but also former senators, the League of Municipalities, and the Nebraska Hospital Association. Why do you think these organizations are against this, the EPIC tax?
Well, one of the reasons is because our current tax code is 1,271 pages. And what we do in those 1,271 pages, we pick winners and losers. And most of those, if not all of those, who are opposed to the EPIC consumption tax, takes away that authority for them to continue to exercise the opportunity for them to pick winners and losers. And as I said in my opening statement, we need to put the taxpayer in first place and not those who get to decide who the winners and losers are. And Art Laffer, probably the most renowned economist in the nation, is 100% behind what we're trying to do. And he told me when he was in my office 2 years ago, he said, you'll be surprised about all the people that will be against you when you're trying to fix your broken tax system. And so this is quite obvious by the organization of those people that are opposed to this, that he was exactly right. But what I didn't understand, it would be the urban, the rural, the conservatives, the liberals, and they would all join forces with the progressive OpenSky, who didn't do a study at all, an dynamic study, and they would all choose to use their information. And so what happens is when you try to change people's minds with facts, it doesn't work because they develop their facts with their own opinions. And that's exactly where we're at today. And so it doesn't surprise me that all these people are against us. And none of these people have taken the time to sit down and analyze what we're trying to do and how we're trying to fix our broken tax system.
Is it scary at all that this is something new? This isn't something any other state is doing right now.
That is correct. But when I spoke to Art Laffer about that, he said those states that don't have income tax is the closest thing that you can come to having an application of the consumption tax. And he also said those states that don't have income tax do better when times are good, and they do much better when times are bad. And so unless we fix our broken tax system, we're going to continue to lose people from the state of Nebraska, because it's obvious over the last 10 years, we've not had one person move to Nebraska from another state greater than the number of people who have left the state. And so it's an opportunity for us to have people make the choice to stay living here, because our tax system will be fair and transparent.
Do you have anything else you'd like to say to our viewers?
Well, just this: go to epicoption.org and take a look at the study, look at the information presented there, and there's also a calculator there that they can figure out for themselves and analyze what this would mean to them personally. The average family of four in the state of Nebraska is going to save somewhere between $200 and $700 a month. Whether you rent or own your property, it's going to be an advantageous thing to have the consumption tax, because you are the one that decides how much tax you pay and when you pay them.
All right. Thank you so much for joining us, Senator.
Thank you. I appreciate it.
We'll be right back.